Hello everyone and welcome to today's Fintech Finance Virtual Arena. Today we have an brilliant episode because we're going to be discussing all about partnerships, and joining me today are some absolute brilliant speakers. We've got Brash from PPS and Norris Koppel from Monese. Guys, thank you so much for joining me. Norris, can I ask you first, how are you doing today? All good?
Amazing. We have Monese has a 7th birthday today, so 7 years since the start. So feeling elevated. Thank you.
Blimey, congratulations. And Ray, how's things over at PPS?
Yeah, it's slightly more than 7 years, but I think we should try and organise a virtual birthday cake. Let's see, maybe one of your technicians can get that up on the screen. But yeah, very, very good. PPS, I'm just trying to think. We're probably coming up to 20 years next year. So that'll be our 20th anniversary. Yeah, no, it's all good. Thank you.
Right. Can I get your input when it comes to, how critical do you think partnering has been for fintechs pre-COVID?
Well, I don't think you would see any of it actually without partnerships. I mean, I can't think of a single example of, what we would now call a fintech who didn't in some way start with some form of partnership, because the definition, it's the use of technology to disrupt financial services. Now, by nature, people are very, a lot of fintechs have very strong technology, product marketing backgrounds. They don't necessarily have financial service backgrounds. So I think when companies got into the market in the first place, they had to partner with perhaps institutions who had good financial services understanding. I don't think you'd have any fintechs without some form of partnership.
Wow. And Norris, I got to ask, do you agree that it's been so critical that it's almost ultimatum, really?
Yeah, broadly agree. I think maybe sort of I think when we look at sort of early sort of many years ago, those fintechs who tried to do a good thing, you could clearly see that without partnerships, they were just slowed down. It's when you look at technology business, for example, it's very easy. You build a prototype, you push it live, you will see how customers react. But in financial services, I mean, just waiting for the license can take a good couple of years. And then, of course, you have to have a team and the kind of compliance element ready. So it's just incredibly slow and takes time. And what fintechs, young fintechs, don't typically have is time. So I think relying on partnership is absolute mandatory. And this is what enabled us to launch as well back in a day. Thanks to a partnership, it was relatively low cost. You can go in and without sort of a massive money burn, you can test whether your product actually works or not, and none of this would be possible really without relying on a partner.
I'd add in terms of our experience. I remember one of the, we came out of the prepaid industry in the early sort of 2010, 2012, and there wasn't really fintechs around. So one of the first partnerships we had was actually with Virgin Money, which in the day was, still is to some extent a challenger, challenging the orthodox financial services landscape. Now they partnered with us because they could see something about the technology and also the regulation around prepaid could give their customers something they just simply couldn't deliver themselves, which was a payment card that everyone could have, which is one of the early things about prepaid. So that was a nice example of how partnerships for an established company, even someone as agile as Virgin, came about for us.
Absolutely brilliant. I mean, it's so incredible to hear how these partnerships actually were the birth of a whole industry. And what we've seen now is obviously probably significant external factors that have probably shaped that industry within the last couple of months, comparatively over the last couple of years. For instance, we've seen Brexit, and we've now had COVID, for instance. Have they underpinned the need for institutions or fintech organizations to kind of proactively look to become a bit more flexible and even local? And Norris, could I have your input on that, please?
Yeah, to be honest, I mean, it depends on what ambition a company, a fintech has. So from our perspective, we have always looked outwards. So we always wanted to be pan-European, truly global. So from day one, we have started looking at, so how are we able to provide services outside the UK as well? So before Brexit, we already started making preparations and pre-Brexit or post-Brexit from our perspective, thanks to partnerships, it is now for us possible to actually provide services outside UK as well. And without partnerships, again, I would say it would be incredibly challenging. You're talking about, again, localized licenses in all jurisdictions, and it just gets incredibly complicated and expensive when you think of that. So for us, again, having these sort of bonds formed early on and thinking a little bit ahead has been absolutely critical.
Definitely. And Ray, how about yourself with PPS? How have these external instances actually made PPS maybe become somehow more important in this situation?
I think when you talk about regulation is always behind some of the challenges and the disruptors, especially in financial services. And so a good example, Monese have done a fantastic job about creating a pan-European product that's localized in terms of language, but essentially it's the same product in every Eurozone. But the regulators are not used to that. The regulator is used to having a national bank and having retail banks who effectively are on soil in that country, and they typically don't do a lot of retail activity outside of that country. Obviously there are some exceptions, but sometimes those ventures have not been very successful. So their whole focus is we're regulating in our way based on the domestic situation, because that's how we've always done it. So the idea that someone can have a bank account and move from country to country, which is normal now, and of course, in terms of the way the workplace is changing, it's becoming even more normal, is something an anathema to the regulators. So hence, we found that we've had to do things which probably we wouldn't want to have to do, set up an office in Belgium to have our own license that's an EU license, even though we have one in the UK. Now, obviously, Brexit caused that, but it goes beyond that. If we want to operate in some markets like Germany, even though it's part of the EU, there's very specific requirements the regulator will impose if you want to operate in Germany or for particular financial service products, even though it's supposed to be a level playing field. So actually, whilst we do have a license to issue in Germany, it doesn't give us everything we want. So we ourselves are partnering with a German regulated entity to provide very, specific products that work very well in the German market. So you still have this throwback to the days where the regulator, if they were, as far as they were concerned, if you couldn't touch it, they couldn't regulate it.
Yeah. How is that going to change now? We're seeing obviously Brexit and, as I mentioned, COVID as well. Is that level playing field going to start becoming a bit more level, or are we going to continue to see the fact that if you want to expand out into these regions, Ray, that people are still going to have to look at this partnering and look at this kind of way of this fintech way, effectively, of operating by bringing in other parties to help out your platform?
Yeah, I can't see it getting massively better, to be honest with you. Obviously, there's quite a few initiatives that will work pan-European. We're a SEPA bank issuer, and we can still make payments across the SEPA zone, but there's something known as a localized IBAN. Okay, SEPA, even though it's Europe and it's one single payment network, each country has its own country prefix. So France has an IBAN with an FR, and Belgium has one with a BE, and etc., etc. Now, as far as SEPA is concerned, the law is, anyone can make a payment to anyone in the SEPA zone. So a UK customer can make a euro payment to a French customer using a GB IBAN to a French IBAN. That's the law, and that's what's supposed to happen. But it doesn't happen in practice. Because there'll be certain institutions in France or banks say, well, actually, do you know what? I'm not so sure I really want a GB IBAN. So I haven't seen so much evidence of that changing. I think from a technology point of view, the European Union, where we primarily operate, it's still, it's not one single currency. So whenever you start working across different currency zones, then you have to work with different systems. They're not all interoperable. Different standards. There's still a hell of a long way to go.
Yeah, and obviously, Norris, with Monese, you kind of pride yourselves for being able to offer your customers that flexibility to operate over all these different these regions. So, I mean, can I get your opinion on how this is going to potentially change and the need for partnership within that?
Absolutely. Just imagine a situation where a customer, for example, is maybe a resident somewhere in the Eurozone or UK, and then picks up a job, let's say in France, but the bank account is still, coming from elsewhere. And then you start your new job in France, and then you suddenly realize that actually your European IBAN or SEPA IBAN doesn't actually work, and you have to open a new one. This sort of an IBAN discrimination is happening all around us, as Ray explained as well. So what we have tried to do in order to make sure that our customers have a better experience, flawless experience, and something that feels like a local, is that apart from languages, we have aimed to give our customers through partnerships and through the partnership with Ray's business, PPS, access to basically deeply localized IBANs. So in France, a French FR IBAN, then we have in Romania, then we have in Belgium, and of course in the UK as well. And the list probably will become a lot longer in the next few years. So the idea is that in any single country, you can truly feel and operate like a local. That's what we want to achieve. And goes beyond localized IBANs. We are talking about things like cash top-ups, cash deposits, basically. In order to make this again work, you need to partner locally, in order to provide a better experience. And without partnerships, all these things will take enormous amount of time and effort, and sometimes be even near impossible.
Yeah, well, I mean, it sounds like quite the kind of move to really bring in all this together. So, I mean, we've obviously one external issue that we've seen obviously in the industry has obviously been the Wirecard scandal. I mean, so does that show an increased risk when it comes to partnership? You know, we've seen, especially when it comes to these localized different sectors, you know, we've seen Wirecard's Singapore section actually have to shut down. So, I mean, Ray, can you tell me a bit more about that and how that's going to change the nature of partnerships going forward?
Yeah, I mean, like partnerships, like a marriage, you know, it can work really well or it can work really badly. I'm happily married, I should point out. But anything where you're relying on someone else in your business, you have to consider the reward and the risk. And it's not just about regulation. There've been lots of examples, especially in financial services, where outsourced, maybe it's outsourced technology providers, it could be, infrastructure, it could be call centers, it could be, development houses or regulators. When any of those fall down, unfortunately, the regulated entity at the front gets it in the neck. TSB, I think, a few years ago, had a serious problem with their mobile app and their web, but it was based on an outsourced system by one of their parent companies, Sabatel. So you're going to have that, which is why the FSA spend a lot of time talking to regulated entities, including ourselves, because we outsource ourselves, about what is it you're outsourcing, and have you taken, the right governance and the right measures to ensure that there's redundancy in what you're doing, or that you've got contingency plans, or you're dealing with it. So, but that's nothing new. Like I said, it's always been the case, and for almost every business I can think of, there's always an element of partnership. The key thing is, why are you doing it? Is there a benefit to your business in doing it? Whether that's strategic, because it allows you to focus your resources on maybe something you're adding value to, whether it's just a pure economic play, perhaps you're quite small and therefore it's quite hard to get the economies of scale, or perhaps you just don't have the expertise and don't want to invest in the expertise because it isn't core to your business. But you equally managing suppliers, and I think with the Wirecard issue, because that's what you've mentioned, it was mainly an issue of governance. Well, it was obviously an issue of governance from the Wirecard Germany point of view. But I think anyone who, when they woke up and found the funds frozen, and suddenly realised in hindsight they should have paid a bit more attention to who they were partnering with, but hindsight's a good thing, and we learn from that. I think since then I think people have quite short memories, so I think a lot of people are still quite now the sort of the panic's over, and obviously Wirecard are looking to dispose themselves of a business. A lot of those companies are probably sticking with that outsourced model, but they're going to be a lot more attention to the new owner, and I think they'll have proper procedures and governance and everything else. And some of the bigger guys have decided actually the time is right for them to take it in-house anyway.
Okay, well, I mean, Norris, with an organisation like yours, which, as you mentioned earlier in the interview, you've got this partnership really from the beginning, from the core. How do you kind of weigh up that risk and reward? Keep that brand integrity, but also bring in these new parties to really kind of just streamline and improve your offering.
I guess from early on, I mean, when I look back all these years and look at how we made decisions back then in order to basically partner with somebody, and what kind of level of due diligence we did, I would say early on, I mean, it was all about what is kind of what roughly ticks the box, and what is we can actually afford as a very young business without any funding almost. But as we grew more advanced and we had our experiences and sometimes negative experiences with partners, it became more clear that proper due diligence and preparation work is it's a must. So we have now, when we are looking at sort of substantial partners, we put a lot of effort into due diligence. And as Ray said, it's a marriage, and before marriage there is a little bit of a period where you have to build up your chemistry and see what's what, and we typically do that now as well. And as we become more mature and more professional, the level of scrutiny actually goes up. So it's not just the other way around, but I think also younger startups really should pay that attention. But still, even if you do all that, it's not still guaranteed that there is not going to be a partner failure. Typically, I mean, when you look at younger businesses, they are typically much more riskier for big partners than the other way around, because a company with limited track record and money is ultimately much more riskier. That's for sure. But it's a game of kind of taking a little bit of assessing your risk and then making a conscious decision, risk and reward, as Ray said as well. And in terms of brand, I mean, again, you've got to pick very carefully, I think, your partners, and it goes both ways. We have seen big brands picking up little companies as a partner that have been ultimately proving damaging, and we have seen the other way around as well. So I would say that from our perspective, we now pay more attention to who we are working with and sort of a reputational and brand elements than ever before. And again, this all comes down to the due diligence and really assessing what you need to do, what you want to do, and with whom.
Yeah, I mean, we've kind of now discussed the regulatory changes from Brexit. We've discussed maybe how some of the technology has changed as well as a result of that. But I mean, something that's now really changing as a result is probably the customer demand is maybe now following suit. Would you agree, Norris? How can you stay ahead of those kind of customer demands now? When we've seen various different regulations change so quickly, and customers' demand also change just as quickly.
I guess it's just constant work. It's never a dull day in fintech. Things change all the time. So ultimately, what you have to do is keep an eye on regulations, but more importantly, keep an eye on your customers and see what they do and how they act, and basically adjust accordingly and put customer experience on pedestal. And that's all I can say, because when we look at sort of the very turbulent world we are in right now, COVID and Brexit and all that, I mean, ultimately it all comes down to, again, making sure that the customers are well served. Those customers who are abroad, for example, can they continue using your services? Will you just shut everything down or not? And that ultimately boils down to customer experience again. So serving customers, I would say, is the main thing.
Yeah, and Ray, have you seen a dramatic shift in customer demand, as a result of these external market forces?
Probably not. If I'm honest, not about the result of those things, because customers actually, you'd be amazed. We have run programs for retailers, gift card retailers, who unfortunately went into receivership, Yet people the day before they went into receivership are still buying gift cards, which you can only use in those retailers, even though it's on the front page of the newspapers and everything else. So I think people don't always connect the dots, and people also have short memories. So I'm not sure the man in the street is necessarily going to think twice about Wirecard, for example. And I'm not sure exactly people understand the impact of Brexit. So it's a lack of knowledge and perhaps a lack of consciousness, in terms of that. I think, frankly, the main thing that customers want, they want to be satisfied. They want to be satisfied now, and they want the service that they want straight away, and they preferably want it to be free. And they have very high demands, and that's something which the digital revolution of the last 10 years, where it's hit every single aspect of our lives. Now we're sitting doing a virtual fireside chat, if you like. We expect all the technology to work. We expect the Zoom conference call to work and the audio and everything, and we expect you guys to edit it and to be up and running tomorrow. That's the kind of expectation we have, which you wouldn't have had 10 years ago. You would have needed sort of 3 cameramen, a sound engineer, a studio, and all that sort of stuff. So yeah, customers' expectations are very high. I wanted to just touch on one point, kind of related to customer expectation, but also to the previous point about branding. I don't think the issues weaken the brand. I don't think outsourcing necessarily weakens the brand, but you have to be authentic. And what I mean by that is, the experience that some of us would have had with a traditional bank, where you want to buy insurance or something, so you go to your regular bank, and we sell insurance, blah blah blah. Let me put you through, and before you know it, you're in a different company. And we've all had the scenario of when they check your policy number, does your policy begin with an H or with a 2? Oh, it's an H. You're gonna have to speak to someone else, and it's not authentic, and it doesn't reflect the culture of the company you're actually working with. So I think you can outsource, no problem, and but the outsourcing has to reflect the culture of your brand as well, and it has to be authentic. So I think that's a key thing for me.
I find it really interesting. You've got to kind of create that, you make sure that the brand is authentic and along the similar lines as your own company. But obviously, as you said, now we're having partnerships take place in kind of waterfall kind of stages where you can really start to work with someone very quickly, when maybe these discussions would have taken 2 years to kind of become a part of one of the old traditional banks. So, I mean, is this something that we're going to have to kind of, as an industry, kind of figure out very slowly, Norris, as we go forward, to try and find out how we can align company cultures as well as obviously the technology and risk behind it?
I guess it's what good company prioritizes, and from our perspective as well. I mean, from day one, we have been focusing on making sure that when we look at partnerships, are there not besides obviously the cost of the services and how it works, but are the values aligned? Is the experience that customers are getting, is it clunky? Is it kind of all aligned? Is it flawless? And then if you talk about the infrastructure, some of this infrastructure is actually invisible, it's in the background, but we also have partnered with other very prominent companies such as PayPal, for example, which, and this is very clearly a visible brand within our interface, and also we have picked them and they have picked us because our values very much align, and things we want to achieve in the world are very close to each other. So we have picked partners based on the value system as well, not just something that is nice and shiny, but the value system is number one. And second also is that, does it give customers what customers expect, or is it just a sort of a tick box exercise?
Yeah, well, that leads me on to my next question, and we've kind of touched on it before in terms of, you can only have a brand, and Ray, you brought up suddenly you get transferred to the other part of the partnership. Would you classify, Ray, a successful partnership in fintech as an invisible one? As you said, that the kind of average person on the street doesn't know about the Wirecard issues. So ultimately, do you just kind of need to keep your partnerships quiet and just continue on that way?
Yeah, I guess so. Like I said, most consumers, when they're talking to the brand they recognize, they really have no clue in the end who's behind it. And we all know that companies have gone through the learnings of, if you offshore your contact center, that damages your brand because the quality is not perhaps what people expect. People don't expect necessarily to be speaking to someone outside of the UK if they're dealing with a UK brand. So that's an example of where it was pretty visible that the outsourcing was not perhaps what the customer was expecting. I was looking at a Starling advert on TV yesterday, and it's like, we have UK outsourced, UK call centres, and you can speak to a UK person, because I guess that's what people expect when they deal with someone like Starling. So there has to be an alignment of, as Norris pointed out, the culture of that company and what you expect to be doing. And if you get that right, then it will be seamless, I suppose. Not necessarily invisible. It's about seamlessness. At PPS, you won't see our brand, our logo, in any of our products. It's not our job to do that. And when I say our products, I don't even mean our products, I mean our clients' products. Our business is to provide functionality and features, which are payment features, regulatory features, but it's essentially functionality and services. We don't even consider ourselves to be a product company, It's actually our clients who put some of our functionality, some of their own functionality, maybe some other partners' functionality and features, and then they present that as an offer that reflects the needs of their own customer base. So yeah, invisibility is for sure how we consider it.
So Ray, if I can ask you then, we've talked about how partnerships in fintech are so important, and if partnerships can be successful if they're invisible, but what's the risk and reward of an invisible partnership in fintech? Can that sometimes backfire?
Yeah, absolutely. The brand is the only thing the customer really cares about, because that's normally who they've been contacted by and they've been acquired by, and that's who they're associating it with. So they really don't care, frankly, why a service perhaps isn't working. The brand is there to present that service. So it can damage the brand. And obviously there's many examples in banking and other services where quite a lot of damage has been done to a brand which has taken many years to build up because of an outsourced relationship. Quite often the issues you hear about downtime in banking, for example, is not the bank itself, it's some third-party provider. So and that clearly is frustrating, but it's also important that those partners aren't visible normally, because the customer has to feel like the culture of the brand they're working with is an end-to-end process. And a good example would be a contact center where you're actually speaking to someone who's representing the brand you're working with. And in the early days of offshoring, a lot of brands were damaged because people would frankly expect to be speaking to someone in the UK, because that's the brand that they associated themselves with, and they couldn't understand why they were talking to someone who wasn't in the UK, and that would have impacted on the brand. And so you have to ensure that your outsourcing fundamentally is in line with the expectations of the customer. And we've provided customer services for Virgin Money. We ran their prepaid card program, and we spent a lot of time working with Virgin to train our people around the culture and the ethics of Virgin. So when they spoke as if they were, they understood the Virgin brand, the Virgin culture. So invisible, but it's got to be seamless.
It's absolutely brilliant.
I would agree on that seamless
Norris.
part. So basically, trust is what we are selling here, and if customer is with us and there is they interact with us and there is any failures, and ultimately they have come to trust us. They don't care who is in the background, whether someone's logo is up there on a screen or not, but ultimately they want us to provide the experience. They trust us, and if something goes wrong, it's as Ray said, I mean, the people don't honestly care, but those invisible brands sometimes then become visible at the point of failure, because sometimes it's those fintechs who have partnered with providers that need to expose where it has gone wrong, apologize, and sort of pick up the pieces and try to restore that trust that has been shaken a little bit. So I would say also that it must be the brand itself who then picks up those pieces, instead of sort of sending a customer to a partner to sort this out. Ultimately, the brand needs to own the experience and be responsible of the overall result. So if they have chosen to partner with somebody, then to an extent possible, the brand needs to make sure that customer is served in their tone of voice all the way as far as possible.
Yeah, because it must be quite jarring to, if something does go wrong, for a company to say, put their hands up and say, well, actually, it wasn't us, it was another company. And I don't know, would that then actually create more issues than just to kind of put your hands up and say, well, actually, we were working with this other company and unfortunately it failed on both sides?
Yeah, there are countless of examples, especially if you go back to sort of early days of sort of a new fintech sort of wave right now, where a young company, very limited funding, very limited team, they partnered up with somebody and then something went wrong, payments didn't go through or cars dropped dead. And every single time they had to go out to their customers and say, oh, our partner, they're failed, don't worry, we are on it, and so on. And that happened, many times. So it's kind of very important that you pick your partners. As we discussed earlier, it's very important to pick your partners and do the due diligence and uptime due diligence upfront.
Yeah. Now, I mean, crystal ball time, where are partnerships going and collaborations going to go in the future? Ray, if I could get your input on this first, do you think we're going to see them become more successful, more important to increase that agility for institutions?
I think they'll certainly become more important, certainly in payments. The reason I'm saying that is the payment ecosystem is becoming much more fragmented, because there's a push to drive competition, especially in Europe, and therefore, traditional kind of monolithic payment providers are being put under a lot of pressure. The card schemes are being put under pressure. So, and it's all being driven by technology, and therefore you're seeing a plethora of players coming into the market to provide partnership services for new types of payments. Open banking is the most obvious one. There are hundreds of players coming in, and that's a good example of where, a fintech would not necessarily need to build its own open banking interface, because they can partner with someone who's already built it. So I think those type of examples, and the different form factors that people are using, the different types of payments, P2P. So I think it will definitely become more important. And as the market moves quickly, and this is the acid test really, you as a fintech and who's got precious money that the investors are investing in, they want to know what the fintech's investing in. And if you decide that actually this particular thing that customers are asking for right now is the most important thing, and you spend 75% of your equity to build something, and then 12 months later that is totally commoditized, and suddenly you can buy that service or as a service from someone else, you've effectively wasted a lot of time and money. So, fintechs are agile, which means that they do incremental steps, and actually a good way of doing incremental steps, especially if you're broadening your offer, going into credit, going into promotions, going into marketplaces, is to partnership. So I think the nature of fintechs, and if we look at some of the most successful, brands in technology like Airbnb, or Uber, they don't own much. That's a lesson for all of us, isn't it? They don't own, but they really get the proposition right through a whole raft of things.
Yeah, and Norris, do you think we're going to see that kind of that constant change of partnerships and really offerings, especially when it comes to the change of the brand, just kind of knowing what the proposition is and using that partnership to kind of leverage that going forward in the future?
Yeah, I think what I'm seeing recently also is that many people are now seeking partnerships more than ever before. In many ways, this is due to COVID as well, and we are seeing that people are becoming more strategic in their approaches to partnerships. There is less now sort of a quick and dirty kind of partnering, and people are giving it proper thought. And especially when it comes to sort of a younger companies, they're trying to see what kind of aspect they are perhaps kind of missing, what can properly add value and strength to their business and to the partner's business as well. So this seems to be happening quite a lot right now. But for us, I mean, from day one, we always have known that we are just simply unable to build everything ourselves. So this sort of, constantly, making decisions about what are we missing, where do we want to partner. It's been from day one on very high on our basically pedestal of decisions. So as Ray mentioned, credit, for example, we know right now that, in order to provide some sort of a credit product that looks good, in order to build it out properly yourself from the balance sheet and whatnot, it's something that will take time and money and effort, and we just simply don't have any of that right now. So for us, it has always been most meaningful to partner with a strong, proven partner or partners in order to provide sort of a more localized, sort of a solid credit proposition, not just in one country, but in multiple countries, because it's very difficult to get it right. Even in one country, try to basically repeat that in other jurisdictions. And as you know, credit is incredibly dynamic, and it's from country to country. You can mess things up pretty bad if you try to do it yourself.
Yeah, I completely agree. And with that in mind, then, if I could get to wrap up and get your perspectives, both of you, on this, then we've discussed the kind of customer change, the regulatory change, and the technology change. Which one do you think going forward is going to be the key driver in fostering these partnerships and being the real reason why organizations will look to partner, especially in finance?
I'll pick that one up. I think the customer side of things, because you can throw technology at people, it's got to stick, okay? Yeah. And it's the customer who decides what sticks, if you look at the customers decided that actually Instagram was quite a nice way of doing messaging, it wasn't the other way around. And therefore, I think I see a lot of companies offering types of services using technology, whether it's open banking, whether it's crypto, B2B, P2P rather. And frankly, fintech has not got a brilliant success rate. I say fintech. People trying to do financial services, it's a very complex space. And many, many people have come up with great ideas that on paper look brilliant. And the technology might be amazing. I think of some spectacular failures. I'm forgetting the name of the guy who tried to recreate. There was the big fintech, the UK fintech that was going to be like bigger than PayPal. I've forgotten the name now, but they failed. The technology was great, but the customer didn't want it. So actually, I think it's the customer will always determine what companies want, and that's why I'm sure Norris spends all his time talking to customers.
I can imagine. Yeah, Norris.
Yeah, that brings me to the point I made earlier as well, is that the difference between tech company and sort of a financial services company is basically it takes enormous amount of time to get regulated, to make sure that your customers' money is going to be safe and whatnot. So, sometimes what the mistakes that companies do and make is that they just have to build, not make a mistake, but actually it's a prudent thing to do, is they are almost forced to build in a garage for years before they can actually properly interact with their customers. And once they launch something, customers may not even want it, and maybe times have moved on. So again, sort of as the strength of partnerships is you can move fast, you're safe, you're regulated, you can get quick customer feedback, and customers are ultimately the bosses. yes, regulations change as well, and sometimes have a Brexit thrown on you and whatnot. That's gonna basically still be manageable, but you can't mess with customers. You gotta listen.
Brilliant. Well, with that in mind, thank you both. I hope you've enjoyed yourselves.
Yeah, it's been super.
Excellent. Well, and to all our viewers, thank you very much for watching. You can catch the rest of the series and much more over at www.fintechf.com and of course LinkedIn and YouTube. So I hope to catch you there. Goodbye.